One of the things that we think is very important is that if you're leasing a car, you need to check the lease agreement very carefully. There are very specific provisions in there. Many of them deal with how the car is to be taken care of, such as how many miles you can drive, what condition it's supposed to be in when it comes back to them as the owner of the vehicle. When they lease it to you, they want to make sure that the vehicle's in good working condition when it gets done, when you're done leasing it. And there are oftentimes provisions as well for insurance requirements. From the insurance perspective, it's a little bit different because most of the time, since you're not the owner of the owner of the vehicle needs to be insured as well. So oftentimes what you'll see is a leasing company wants to have some protection in addition to the driver of the vehicle. And that driver may only buy what we call minimum limits to meet the financial responsibility of the law. For example, in Florida, it's $10,000 per person, $20,000 in an aggregate, and $5,000 for property damage or medical payments. But in leasing situations, the leasing company may require $100,000, $300,000, or $100,000 for those same parts. In other words, the per person, per accident, and for property damage, for the liability that they may have because you're driving the vehicle that they own and you don't. So there's a little bit difference in the ownership. It's important. It's also important because they want to protect their investment. When you're leasing a car from them, it's not unlike if you're renting an apartment. The apartment belongs to someone else, and they want to make sure it's taken care of. I think it's fairly new. We haven't seen a lot or heard a lot about it. It points to the very strong importance that the dealer has and the consumer has to make sure they ask the right questions, and the dealer's responsibility to make sure they are providing the right information to the consumer about the lease. The other thing consumers can do is they can buy gap coverage, which often covers the difference between what the car is worth. Say you don't put, in a lease deal, a lot of times you don't put as much money down, or even when you buy it with some of these zero financing, sign and drive type of ads, you don't put a lot of money down, and yet when the vehicle leaves the lot, it starts to depreciate. If something was to happen to that vehicle in the near term, then there's a gap between what you owe on the vehicle or what the value is to the lease company and what the value is based on an insurance standpoint, because it has started to depreciate. So what happens is the insurance companies have started to offer what they call gap coverage, which is a way that you've seen it advertised on TV, where they actually say, we'll buy, if you have a 2 or 3 year old new car and you bought it new, they will pay to buy you a new car to replace it should something happen. Now that's for when you own a car. In a leasing situation, that might work out the same, but you need to be careful because the wording of the policy may be slightly different. And the dealership or the manufacturer that is setting forth the terms of the lease may require something different, as is in this case that you've described. Most of the time, one of the things they're concerned with, and even then, I'm not sure they're always concerned with it, is how many miles can you drive in a year under the lease? Because a lot of leases provide for what they call them low mileage leases, 10,000 or 7,500 miles a year, when the national average for driving on a yearly basis is between 12 and 15,000. So that's a provision that people may be asking about, but again, they may not be. So this one's even more unique in that the individual buying the car or leasing the car in this case needs to make sure they understand what they're getting into and what they'll be required to do to protect that investment for the company that's leasing the car. The key takeaway I see for customers is to make sure they ask all the questions they can and do a little research about the specifics of the lease, the dealership, and the insurer that you're doing business with, and make sure to ask the insurance agent or company about the gap coverage if that's something they think they need, and what it would provide for in a circumstance like this.